I rise today in strong support of this resolution to overturn the Consumer Financial Protection Bureau's deeply flawed final rule on larger participants in general use digital payment applications. Sounds complicated, Mr. Speaker, but it's not. This is a midnight rule created by the Consumer Financial Protection Bureau, and it's overly broad and it's imprecise. It treats a wide variety of digital payment applications, peer-to-peer apps, digital wallets, e-commerce tools, as though they are identical simply because they facilitate payments and serve a large number of users. But these products are not the same. They serve different models, operate under different rules, and pose different kinds of consumer risks. This kind of regulatory overreach is bad enough on its own. But what makes this rule especially concerning is the process by which it was created. The CFPB's approach to carry out this rulemaking is a clear example of undemocratic and unjustified action. The CFPB gave the public just 30 days to comment on this proposal. 30 days for businesses across the country, members of Congress, state regulators, and the public to weigh in on a rule that has potentially profound consequences for digital commerce, one of the most rapidly growing portions of financial services and fintech. In addition, the Bureau rushed to finalize the rule in the waning days of the Biden administration, ignoring much of the stakeholder feedback and pushing it through to try and insulate it from future scrutiny or reconsideration. Now, this is not the first time that the CFPB has issued rules without sufficient transparency or process. In fact, members on both sides of the aisle during my years in Congress have routinely criticized the CFPB for rushing matters, not following the process, not giving the public sufficient time to criticize and critique its proposals. But, Mr. Speaker, this needs to be the last time that the CFPB does this. In a post-Chevron deference world, Congress must step in and assert our Article I authority over independent agencies that stray beyond their statutory authority, bypass the legislative process, and undermine the public trust. Let's be clear. There's no apparent evidence of widespread consumer harm that justifies this rule. There's no demonstrated market failure here. What we have instead is an agency stretching its mandate in a way Congress never intended. By allowing this final rule to remain intact, we are affirming that scale alone justifies the regulation, meaning size, scope alone justifies the regulation, regardless of the conduct, the risk, or harm to a consumer. This CFPB approach violates decades of balanced principles in assessing and implementing regulations in finance. And it's certainly not the barometer that Congress intended for the CFPB to use when interpreting their authorities. This is not responsible, risk-based regulation. It's a shortcut to control applied without the justification that both consumers and innovators deserve. Some may try to frame this argument as a gift to big tech. That's a distraction. This is not about defending large companies. This is about defending good governance, our legislative authority, and the public's right to be part of major, costly regulatory decision-making. If we allow this rule to stand, we're setting a dangerous precedent, one where federal agencies can bypass Congress, ignore public input, and rewrite rules largely behind closed doors. This is a precedent that we cannot afford to set, regardless of who's in the White House or who's in the crosshairs. Mr. Speaker, the CFPB operated without accountability or transparency. It has undermined consumer protections, stifled innovation, and eroded the public trust. I encourage my colleagues to support this resolution and reassert the proper role of Congress in setting the regulatory agenda and shaping sound financial policy, and I reserve the balance of my time.
Gentleman from Arkansas reserves. Gentlewoman from California.